Hello friends, so once again I'm back with another video. So we are going to be talking about volatility 75 and I'm going to be sharing the RSI hack as a price action trader. So all you should know about me, personally, I'm a price action trader. I use price action in my trading. That's what I love to do. That's what works perfect for me. But these videos are on demand. It's because maybe some of you are new to trading and you would need something that probably would help you to first guide you as you go on. So I know price action is not easy, but for me that's what I do use. But as I always say, that I also have some information on indicators. So that's what we are going to be doing. And now in this hack we are going to be using the 50 minutes time frame. Now personally, those that are part of my mentorship program, they know for me I like the 50 minutes time frame so much, because that's where I take my entries. Your predictions are most likely to be right, you get, because it's a manageable time frame. Then you are going to use the 50 minutes time frame, and then we turn on the period separators. I believe you know how to turn on the period separators. And then in this we are going to be referencing 3 days. You get day 1, day 2, and day 3 is the current day, you get. So which means tomorrow, let's say we eliminate this day, we use this as day 1, then day 2, and then we get day 3 tomorrow. But then I want us to illustrate as day 3 being the day of today, you get. So this hack is going to be working in that way. Today is day 3, you get. It is day 3. Let me even extend them a little bit down here like this. So that's the first thing. We mark out our days: day 1, day 2, and then day 3. So now what else do we do? Now what we are going to do, we go to day 1, we compare these days, also day 1 and day 2, you get. So when we compare them, we are going to look for some areas of resistance and support, you get. So we mark out 3 zones. So day 1 we have the outermost high, you get, volatility 75, this high here, you get. We look for the intermediate high, the middle high, you get, because always when you go on the chart, when you compare 3 days, you're going to find that there is a concentration of prices around a middle line, you get. There is that area in the middle where prices seem to be also rotating. Then we are going to look for the outermost low, you get. So we have this, you get. So let me, so the outermost low. So we have the outermost high, the high, you get, on day 1. Then we have this middle, you get. So we have that middle ground. We look for an area where prices seem to be concentrating too much, and then we have this low down here, you get. So what does it mean? We believe that it is most likely that prices either will be rotating through these bands or breaking through the down one to the upper one, you get. Actually we've demarcated our range, you get. So this is like our range. This is the downmost, you get, the support. We have the middle ground, and then we have one that is up, you get, that is up. Let me zoom out a little bit. So that's what we are going to be doing. That's the first step before we even add the RSI. Then the next thing that we are going to do is that we are going to add another indicator. So there is something that I shared recently, that that as price action traders we can use the indicator. At least it's the moving average 13 period 13 method exponential apply to close shift 0, you get. So that moving average, it can help us. That is one of the first things that we do, but it's not all. This video is majorly, we are going to be majorly using the RSI match. As price action traders, we had to first zone out areas possibly of support and resistance, or areas where we would expect prices to be manipulated, you get. We know that areas of support and resistance are areas where we mostly find the manipulation, but those that have been part of those that are part of my mentorship, they know what it means when it comes to manipulation, you get. So we can see that first of all, even before we go any further, as we zone out, we can see that down here, as prices go above, when candles start to form above the 13 period exponential moving average, they would consider possibly to buy. And when prices, let's say, reach this area of resistance and then they get below the 13 period exponential moving average, maybe they would consider to sell. You get the same thing that is happening today. Here we can see that we reached the downmost low, the support down here, and then prices started to candles started to form above the 13 period exponential. We would say that possibly the prices have reached here. Now we reach the middle ground, an area where prices concentrated in the middle, where we can expect, let's say, prices to bounce off. We can see that we bounced off here, and then we start taking entries down. Now, yes, we may consider the 13 period exponential, but it's not the only one. Possibly would have considered here this area of resistance. As prices started rejecting here, the moving average is just an addition. What next do we do? Now, for instance, here we can see that candles are forming below, so possibly they would consider to sell. You get? Then what else do we consider? We are going to add now our RSI. You get? Because this video is mainly about the RSI. You get? So parameters are going to be period 50. The RSI, it's going to be period 50. Apply to close. You get? The levels, we are going to add only level 50. That's it. Then we press OK. So now, what is it going to be helping us? Now you can see that this RSI, it is either above the 50. You get? Either it is ranging below the 50 or it is above the 50. So which means the RSI, you get? This RSI, when it goes above level 50, we believe the market is bullish. You get? And when it is below level 50, we believe the market is bearish. What else do we consider? You get? What else do we consider? When the RSI comes and then it bounces off level 50, you get? And then you can already see here that we have the middle ground here. You get? Where the price is rejected off. I want to zoom in so that you can see. This is the middle band. This is the middle line that we have. You get? And then you can see that in that area, in this area here where it rejected off, we have our resistance here that we had already marked off. And then you can see that the RSI failed to break above this level 50. You get? So it was one of the confirmations that prices were rejecting off, and then we are taking entries. You get? So at least if we add the confirmation of the RSI, it has bounced off level 50, they would say that this resistance maybe is validating. So here would consider to be selling. You get? Would consider to be selling. And now when prices come, they reach this level here. You get? They may reach this level here. We know this is a level of support just down here. Possibly we would wait for the prices to form above the 13 period exponential moving average, and then we buy again. You get? So this is one of the hacks. But remember, if I make a quick run through, we note off 3 days: day 1, day 2, and now we are using day 1 and day 2 to predict day 3. What do we use day 1 for? Day 1 and day 2, we consider the for the outermost highs. You get? Or the outermost highs. This is the highest point. You get? We mark out the highest points of day 1 and day 2. You get? So when we mark them off, we also mark out the middle line. You get? There is that area where prices seem to be flipping. You get? So now then we add this moving average, we add the RSI. I hope this can help. So for more information, you can check out in the description, and then possibly if you want, you can text me there. There is a link to my Telegram channel. For now, wish you the best and peace.